Hey, Ronnie, let's talk about homeowners now that want to buy a home. And with the change in the market where things aren't moving quite as fast as they used to, what do you have in place that'll help a homeowner to be able to buy their next home without moving out of their current property or being homeless?
Well, I am a big fan of our bridge loan product. Our bridge loan product, I just a little background about the bank that I work for is we are a community bank based out of Plano, and as a community bank and lender, we have to create products to invest in our community that we deviate from traditional loans, right? We offer conventional loans, as we talked about, but we also offer portfolio lending, and our bridge loan is our big hitter, if you will. And the bridge loan is designed to help an individual purchase their dream home, if you will, because every client that comes to me for this product says, I found the right house. I'm ready to execute on an offer and or a closing date soon. However, I need the equity from my existing home and or my debt to income ratio won't hold both mortgage payments, so I can't finish that offer until this home is sold. So how we come in and alleviate this issue is we created a program that allows us to finance up to 100% of the sales price of the new home. And we put our clients in a temporary loan. Temporary loan meaning it's a 6-month loan from the day that we close, buyer moves in and gets their keys. We give them 6 months to sell their existing home after they close. And we structure that 6-month loan on an interest only loan with no mortgage payments. I'm telling you, Troy, if you go out there and shop, you will never find a lender that will give you 100% of your sales price of your new home and tell you don't worry about making a mortgage payment to us for 6 months. That's a rare loan, and the reason why we're able to do it is we look at our clients' collateral, the home that they're selling, right? We look to see how much equity they have in that existing home. And if they have the equity that we're looking for, that allows us to we place what we call a lender's lien or in on the home that they're selling, that allows us to make sure that when they end up selling that home that they can take that equity and literally pay down our bridge loan. And when we pay down that bridge loan, now we have, when that home is finally, their existing home is finally sold, we pay down our bridge loan balance by the equity that they say they want to apply towards that. And once that we have that equity injection, now we have a payoff that has 20%, 30, 40% in equity, and we can refinance them into a conventional loan at that time.
So if somebody has, for example, $100,000 in equity, but they qualify for a $400,000 home
Mhm.
on another purchase, they can buy that $400,000 home as long as they qualify. They have 6 months to get their other property sold, and then they can use that 100,000 or portion thereof
There you go.
to bring down their balance of what they owe on the new home. And at that point in time, it's going to lock in at today's rate.
There you go.
Um,
Yep.
Now, let me ask you this. I'm gonna segue into something a little bit different. But do they then have the opportunity to do a temporary buy down, or is it just locked in at the rate?
The buy down, you can't do that on a refinance program. It has to be a purchase. So on that scenario, we'll take whatever the current market rate is doing, right? And remember, we talked about this earlier about how to get a lower interest rate. Is, now that they have that equity injection, 20, 30, 40%, whatever the amount from the sell of their home, they're going to get a lower interest rate than they would if they were purchasing at a five, if they want to purchase the home and look, I need to wait for my home to sell, but I only have 5% down payment. They're going to have, in that scenario, a higher interest rate, private mortgage insurance. The payment is much higher for that individual versus a bridge loan when someone says, look, just get me in the home now, 6 months, no mortgage payments. And then when my home sells, I'll then look to bring in all this equity and capture a lower interest rate.
So they can't do a temporary buy down, but let's say someone's got a couple $100,000 in equity and they're borrowing 400. So it's a 50%, or if they put all of their equity
Correct.
into this new loan once their home sells. Do they have the ability to say, I don't want to put all 200 into it. I'd like to put 150 into it and use some of my equity to buy down the rate permanently? They have that ability?
Yes, that happens often, where people actually call me and say, you know what, my original plan was to put down that $200,000 in equity, but I want to, maybe upgrade the home. So our goal is, when we capture that equity from the sale of their home, I contact the client at the time that they get under contract, and I revisit their scenario. I ask them, what did you end up selling it for? What are you going to net from the transaction now that we have the payoff on that property, and we have the sales price? And the buyer will tell me what, if they want to utilize a portion of it to go towards the bridge loan, and they want to keep some of those funds liquid. Our goal is just to make sure that they can get a traditional loan, right? So when I actually run their refinance, I'm going to go back to them and say, yes, you can actually keep X amount of dollars and still get a conventional loan. Our goal is their goal. We want to get them in a conventional loan, and we want to make sure we can push all the information from the property that they're selling back into this one, and close out that transaction. So
I think that's amazing because it gives the client, the homeowner, options. I think part of the misconception is if they do a loan like this, that all the money is going to go towards the next loan, and they don't have any options. They're going to be stuck in at a high rate. I mean, this goes back to communication and establishing a solid game plan with the client. And as times change and people's circumstances change, what I love about what you're saying is that there's options. It's not a one size fits all. There's a way to make things happen for consumers that suits their interest with the equity. I
correct.
also love the fact that what you said was there's no payment for that 6 months. So that takes a lot of stress off of that individual or that family to go, oh my gosh, I don't have my home sold and I got this other home I want to buy and I can't do two mortgage payments. I don't have the income, or I'm uncomfortable with that. This loan is something that I think homeowners that are thinking about buying a home should absolutely look into. Going back to other conversations we've had, is get a game plan together. And Ronnie will provide you all the numbers up front so that you know that you're fully informed. The biggest mistake I've seen buyers and consumers make is they have an idea what they can do, they move forward, but they don't have all the facts. So I love the fact that when you give people an approval or you establish a game plan, it's right there in black and white. They know exactly what they're looking at before they pull the trigger. So I appreciate that about you.
Absolutely. And one other key component that I've heard from on the bridge loan is, I've had multiple conversations with clients, and they come to me and say, I've heard about this bridge loan, I understand it. And every client, Troy, I start with by letting them know that don't be misconstrued by what you see online, because there are other lenders that offer quote unquote bridge loans, but they're not really bridge loans. They're what we call HELOCs, home equity line of credit. They're going to come to you and say, look, we have this bridge loan product where we'll just give you a line of credit on your existing home, and you can go use that line of credit to go apply for a down payment. Well, you still have to make a monthly mortgage payment on that loan. You still have to qualify with both mortgage payments. It's not a true bridge loan. This product was created as, again, as our community investment act, where we invest in our community. We create products as a community investor, and this is our product where we created that. We wrote the guidelines, and no one else offers this scenario. So definitely, if you'd like to learn more about it, I'd encourage your clients or anyone just to give me a call.
I agree. I think knowledge is power, and I agree with you on everything in which you said. That if clients will investigate, they will talk to a lender, they can compare apples to apples, because not every lender is created equal. Not every loan program is identical. So I think you nailed that, man. Thank you for that. Buyers or consumers in general need to do their homework. If they need help in figuring out which path to take, the most important thing is to ask a lot of questions and have true clarity before they start spending money.